U.S. stock futures surge as China trade deal gains momentum, markets wrap. U.S. equity markets kicked off a strong week after fresh signs that Washington and Beijing are narrowing the gap on a long-standing trade dispute. Futures tied to the S&P 500 rose 0.8%, positioning the index to prolong its historic advance. The optimism was sparked by a series of tentative accords announced by senior officials from both countries, paving the way for a high-profile meeting between President Donald Trump and Chinese President Xi Jinping. With the prospect of a trade breakthrough, investors shifted out of safe haven assets. Gold prices fell and Treasury yields rose across the curve, signaling renewed appetite for risk. The timing could not be better, as the Federal Reserve is slated to keep interest rates steady next week, and a wave of earnings reports from tech behemoths such as Apple, Microsoft, and Alphabet is on the horizon, offering further market direction. Analysts stress that the newly signed understandings, while encouraging, still leave critical issues unresolved, including intellectual property protections and market access guarantees. These lingering questions mean the rally could be tested if negotiations stall. Nevertheless, the prevailing sentiment is one of cautious optimism. A potential U.S.-China deal would lift exporters, multinational firms, and supply chain-intensive sectors, while also easing the geopolitical risk premium that has weighed on equities for years. Market participants will be watching the upcoming diplomatic talks and earnings releases closely, as both could cement the rally or introduce new volatility. In the meantime, the combination of trade deal optimism, steady monetary policy, and strong corporate earnings expectations has created a fertile environment for equities to continue their upward trajectory.